Okay, welcome back. So we're going to start on the next part of this question, and it is the cash flow statement. So we've done the first reconciliation statement, now to the cash flow statement. And just to speed things along, because this is going to take a few videos, definitely, I've written out the heading, cash flow statement of Grant PLC for the year ended 31st of the 12th, 2016. And then I've put in the headings. Now, they're the same headings as for the ordinary level, except you have to learn them off by heart because they don't give you them in the question. And there's one extra, which is the management of liquid resources. And I think we mentioned that when we were doing the ordinary level anyway. Let's see. I have also written in the different things that go in under the headings. There are going to be some extra items that you wouldn't have seen at ordinary level, and we'll go through them in due course. And again, just to speed it up a little bit, I've put in the first item, which is the exact same for ordinary or higher level, and it's the net cash inflow from operating activities, which we take from the last line of the first reconciliation statement, and it's a plus 186,000 because it was an inflow as opposed to an outflow of cash. Okay, so I'll do the easier, more straightforward ones first in this video. So I'll be skipping around a little bit, and then the ones that require a little bit of talking and a little bit more calculation we'll do in the next few videos. Okay, so working our way down through it, there's interest paid and interest received. At ordinary level, it was just interest paid, but at higher level, usually you'll, well, not always, but you'll often get interest received as well. And it goes in under the heading return on investment. So interest that you receive is a return you get on your investment. And servicing of finance, and we said in the ordinary level that paying interest on your loans is how you service your finance, and so that's where the interest paid is. In this case, it means debenture interest paid, which is loan interest paid as such. Okay, so let's look at the two of them. So the first one is interest paid, so let's go to that one first. And just like the ordinary level, and I'll go through it very quickly, there are three items here that we have to look for. There's interest for the year, minus 12,000. That's the amount that you ought to be paying. Then in the earlier balance sheet, 2015 balance sheet, there is interest due, money that you that you owed, I suppose, at the end of that year, 3,400, and in the 2016 balance sheet there's interest due of 2,800. So I'll just do this one, I suppose, carefully, and the rest of them I'll skip through more quickly. Now, the step we had from ordinary level is take whatever's in the earlier balance sheet, 3,400. I'm going to write it down here. Add whatever the figure in the profit and loss account is, 12,000. And then subtract whatever is in the later balance sheet, 2,800 in this case. So it's going to give you, what's that, 15,4, 13,4, 12,6, isn't it? 12,600, okay? And that 12,600 I'm going to put in here. 12,600, and because it's interest that you paid during the year, it goes in as a minus. So any money being paid out is a minus, any money that you got in during the year goes in as a plus. So just to explain this one more time, why we do this process, we say that at the end of 2015 you owed 3,400 in interest payments. Then you got a further bill during 2016 of 12,000 euros. So supposing you hadn't paid any of this earlier amount that you owed, and you got this bill in on top of it, then altogether you would owe 3,400, and another 12,000 is 15,400 should be what you owe at the end of 2016. But if you go to check how much you owe at the end of 2016, which is the amount here in the balance sheet, it says you only owe 2,800. Well, if you don't owe the full 15,400, it means you must have paid some of that interest. So what we do is we add the first two, that gives us the full 15,400 that you should have owed, but then it tells you only owe 2,800, which means if I subtract that from 15,400, I get what I must have paid. I must have paid 12,600 if I now only owe 2,800. And it's the amount that I must have paid I put in here, not the amount that I ought to have paid for the year, not the bill for the year, what I actually paid. Okay, So it's going to be the same three-step process for a lot of these things. The next one is, interest received, the money you got in. So again, up here, it has investment income, that's investment interest, 2,000, okay? Down here, there might be some investment income due. There was 400 that was due to be paid to or owed to you at the end of 2015. So we add that 400 and this 2,000 gives me 2,400. Subtract this 300 is 2,100. And that's what goes in here, 2,100. That's the amount you must have received in interest. So putting the two of them together gives me a minus 10,500. Okay, minus this and a plus that together gives me a minus 10,500. Next thing is corporation tax paid. We're going to do that pretty quickly in the 3 steps as well, if need be. Sometimes you won't have to. So let's see, there is tax owing at the end of 2015, 45,000. I'm going to add that to the tax bill for this year, which is 44,000. So let's just write it down here, 45,000 plus 44,000, that's what, 89,000. And then subtract whatever's owing at the end of 2016 is 36,000. So what did I say? 89 minus 36 is 53, isn't it? 1,000. So corporation tax paid over here, 53,000. And of course, since it's money you're paying out, minus as well. Okay. Right, what's next? Sale of investments. That's a relatively straightforward one. Well, let's look at, I suppose, the heading first of all. Capital expenditure. So even though it just says expenditure, it's any money spent buying fixed assets or any money that you got in from selling fixed assets. And it says financial investment. So any money that you spent buying investments or any money that you got in from selling investments that you already owned rather. So first one, sale of investments. Well, if we look over here, you had investments of 280 at the end of 2015. You have investments of 75,000 at the end of 2016. It means you've sold some. Your investments have gone down. So subtract 75 from 280 gives you 205. That's the figure you put in here, 205,000. Now that will go in as a plus because if you sold investments, you got money in. You got money from selling your investments. Okay. Next one, sale of buildings. We're going to skip that because that involves a bit of calculation, as I probably mentioned in the last video. Purchase of machinery. Well, let's just have a read of this and then look at the balance sheet. It says, first of all, that there were no disposals of machinery during the year, but new machines were acquired. Well, that makes it reasonably straightforward. That means that if there were no disposals, you didn't get rid of any, but you did get some new ones, buy some new ones, then your cost must have increased by the amount that you paid for the new machinery. So all we have to do is subtract. 405 take 325 gives me 80,000. Okay, so you paid 80,000 to get those new machines, and since you paid that money to get the new machines, that goes in as a minus, money out, if you like. Purchase of buildings. Here we don't look over in the balance sheet because we know that there were buildings which were bought and sold. So we just look over here where it says new buildings were purchased during the year for 200,000. So quite simply, 200,000 over here. And since we purchased them, that goes in as a minus as well. We'll come back to the sale of buildings in a little bit. Okay, equity dividends paid. That's generally one of these 3-parters again, unless, as is the case in this one, I believe. Let's see, yeah, there's no dividends due down here, which case we just take whatever the figure up here is, because it works out the same way with your 3-parter. If you take it as 0 here, plus this minus 0, well then it just works out at whatever the dividends figure up here is. So your rule still works, but it's unnecessary. So dividends paid, it says here 32,000, and that's the figure we put over for our dividends. Where are we? Dividends, equity dividends paid, 32,000. And again, because we paid those dividends out to our shareholders, that goes in as a minus. So normally we would add up all of the figures we have on the first column here and do a subtotal, and that's my net cash inflow before I get to the liquid resources heading and the financing heading. But in this case I can't do that yet because I haven't done the sale of buildings, so we'll just leave that blank for a moment. Management of liquid resources. So we talk about liquid resources, we're talking about any kind of assets that we could turn into cash very quickly without losing the value of them. So for instance, something like stock wouldn't be a liquid resource because you can't change, say if you owned a shop, you can't turn your stock into cash very quickly unless you had like a big sale and you sold everything off at half price, but then you lose the value of the stock. You don't you don't realize what the stock was worth. Whereas there are other things that are more easily turned into cash without losing any value, and the only one we ever come across in this question is government securities. And government securities are like bonds that you buy, so maybe like government bonds that it's like you're investing in the government, and it's said in these questions anyway that if you own these government securities, you should be able to trade them in for exactly what you purchase for them at any time. So that makes them very liquid, or something that you can quite easily turn into cash. So management of liquid resources, anytime you purchase or sell, in this case, government securities. So if we look over to our question here, since these government securities are an asset, now they are an investment as such as well, so you don't usually see them up here. They're always in the current assets, but I don't think it would be particularly wrong if you saw them up there in your financial assets section. But in this question, you always see them down here in the current assets. So we noticed that you didn't have any current assets or any government securities, last year. And then by the end of 2016 you had 40,000 worth, so you must have purchased 40,000 worth of these government investment or these government securities. So we put in this 40,000 here, and again, if you bought them, if you purchased them, it means you paid money out, so that's a minus there. Okay, so repayment of debentures is the next thing. So this is the same as the ordinary level question, so we'll go fairly quickly through it. You had debenture loans of 350,000 in 2015. In 2016, it's down to 180,000, which means you must have paid back some of those loans. So the difference between this and this is 170,000. You must have paid back 170,000 worth of loans. So that again we'll do up here, 170,000. And again, if you paid back that money, then that's a minus in there because it's money gone out of your account to pay back those loans. Okay, so the next thing is in your financing section, if you issued any shares, you got money in from selling shares, if you like, or issuing shares. Well, according to this, you had 580,000 in 2015 of ordinary shares at €1 each, and then you had 700,000 at the end of 2016. So you must have issued a further 580 from 700 is 120,000 worth of shares. So we put in 120,000 there, and again it's going to be a plus because you issued or sold those shares and you got money in for selling those shares. Okay, and the last one, you don't always see this at ordinary level, but our share premium there has gone from 13,000 up to 20,000. That's up 7,000. We're going to put in a plus 7,000. I'll just talk about that in a second, what the share premium is. The share premium is basically, if you sell a share, the nominal value of the share, or the original value of the share, might, like in this case, be €1. But if your company has been doing well, then people might be inclined to pay more for your shares. In other words, the value of your shares have gone up over time. So you didn't, when you sold those 120,000 worth of shares, you got more than 120,000 for them. In fact, you got 127,000 for those shares. So you got 120,000 of the nominal value plus another 7,000, another premium, I suppose, on the value of those shares of 7,000. So people paid you more because they were worth more than what they originally were when you were first offering them. So that's, again, since it's more money that you got in for the sale of those shares, we put it in as a plus. So these two will always be pluses really in these questions. And then we can, I suppose, subtotal these. Minus 170 plus 120 plus 7 is a minus 43 altogether. Minus 43,000. Okay, and we can't do the increase in cash just yet because we are still waiting on this subtotal over here, and we'll fill in the last few figures there in the next video.